So I don't have to tell you this. You all know that NEOS provide one of the best high income ETFs because their ETFs don't have NAV erosion, and also they have a greater return and pretty decent distributions. But what if I tell you that there's one NEOS ETF that is overlooked? Not many people are actually talking about this. And in the end, I'm going to give you one of the best YieldMax ETFs that has returned pretty good and also is also overlooked. So those are the things we're going to cover. It's going to be a short video I'm going to make today, Saturday. This is just Saturday's update. Weekend. I know a lot of you guys are just chilling, but you always have to get these updates so you know what's happening with the market and your income ETFs. So let's start. First here, I'm going to show you on a NEOS website a bunch of their list of the ETF they have. The first one here, we start with IYRI. This one is a real estate ETF. The distribution rate is 11% and 1 year return. It hasn't been out for that long. So we only have, since inception, has returned about 7.26%. Next ETF is one of the NEOS Populous ETF. Along with QQQI, I'm going to show you that ETF, and of course, it's one of the best performing ETFs. SPYI distribution is 12.09, and it has returned a 16.29 since inception, about 13%. So pretty impressive. There's no NAV erosion for these ETFs, and as I've mentioned before, guys, it's not always wise to go to the ETF that paid huge distributions. The ETF that paid a little bit distribution, like a SPYI, does pay 12% is a decent, but also you are not having the NAV erosion because your ETF keeps growing and you have good return. The other ETF I'm going to show you here is a QQI. This is the most popular ETF from NEOS. It has the highest asset under management and the return is pretty good. Distribution rate right now is 14.11 and 1 year total return is 20.75, so about 21%. Since inception, this ETF has returned about 15%. Very impressive. See, you're getting a pretty good distributions and your ETF doesn't have NAV erosion. That's kind of things you want to see. The other ETF I'm going to review is IWMI. This is Russell 2000. Return here is 25.39. Since inception, about 13%. The yield of today is 14.47. So very pretty good, decent yield. And actually, what you can do, you can combine, for example, QQQI, you get the NASDAQ, and you can have IWMI, you can have the Russell. So you have the biggest stock from QQQI, which is a NASDAQ, and you have the small cap, which is a Russell 2000. It's a very good blend and very diversified. Now we going to see BTCI. This is one of those speculative assets. Bitcoin is always volatile, and total return right now is negative 14%. Distribution rate though is 26.36. So you're getting a higher distribution, but your return is not as good. But again, if you believe in Bitcoin rebound, if a Bitcoin thing is coming up again, guys, this is an ETF to pick it up. I personally have some Bitcoin. I always keep buying Bitcoin ETF because I do believe Bitcoin right now is at the lowest and it will come up. But that's a long-term play. But if you want a short-term play, there's going to be a lot of volatility with Bitcoin and Bitcoin ETFs in general. And any asset that relates to Bitcoin, for example, these ETFs that has to deal with MSTR. So those ETF from YieldMax, from Roundhill, from whoever ETF issuers, they're going to be very volatile. Remember when I told you there's one NEOS ETF that has a great return but is overlooked, and this ETF is MLPI. Check this. This ETF price of today is 57.87, but return with a drip has returned 23.5, round up to 24%. A total return with no drip is 22. Share price has increased by 16%. And it has increased its distribution by around 2.2%. I'm going to show the yield of this ETF, but check this, man. Return is pretty good. It just keep going. There's no NAV erosion, but no one is talking about this ETF. So maybe it's your first time to hear about this. But what's intriguing about this ETF, what's important about this ETF is what it has to do. It has to do with infrastructure. So this is very important because of what I'm going to mention in a bit. So now if we look deeper on MLPI. You check this monthly. It does pay monthly, of course. Distribution is 14.75, so it was about 15%. Management fee is 0.68. So it's a pretty typical with all the NEOS ETFs. If we look at the distribution history for 2026, it has paid 4 times. Of course, January, February, March, and April. It did pay 66 cents, 67 cents, 68 cents, 66 cents. So it pays between 66 to 68 cents, which is not bad. And I really like this because you're expecting pretty much consistent distributions, because between 66 and 68 is not that much difference. It's not like it's going to pay 20 cents here and he's paying 60 cents here. So you're getting between 66 to 68. I would say that's very consistent, which is good for an income investors because it's more reliable and it's very easy to do budgeting if you want to do budgeting with your income from these type of ETFs. The fund was incepted December 17th, 2025. So it has been out for now more than 5 months. Within 5 months with that type of return, it's pretty good. So what's a big deal about this ETF? The NEO MLPI and Energy Infrastructures High Income ETF is an exchange traded fund that mostly invests in energy equity. The fund aims to provide high monthly income by combining North American energy infrastructures exposure and co-writing strategy. So what I'm excited about this ETF is that it has exposure to energy, because we know a lot of ETFs that we have, especially these income ETFs, they are in the NASDAQ, S&P 500, all these higher growth ETFs and volatile ETF, but they don't have many energy exposure. And right now with this data center, you're going to need a lot of energy. So these type of ETFs for now, they seem to be under the radar, but I think they're going to do well because we're going to need a lot of energy. So this is the kind of ETF to put you on a watch list and keep watching, and maybe it might be a good ETF to invest for long term. But of course, there are always good energy players that you can invest directly. You don't have to invest in these income ETFs. But if you're an income seeking a person, then these are type of ETFs you can invest. Not only you are getting growth, but also you have exposure to the energy. So here are the list of all the NEOS ETF with their 1 year return. So the top one is going to be the ETF with the highest return. Check this. The Russell 2000 has returned 32% in 1 year. Year to date, from January to now, 10%. QQQI 28% in 1 year. SPYI 22.55, 23%. QQQH Neo Nasdaq 100 Hedged Equity Income 18.91. This has a lower yield at 8.85, very low yield, but the return is good. SPYH Neo S&P 500 Hedged Equity 18.57, lower yield but a good return. Now HYBI same 7%. As you can see here, these are all the ETFs. So it's really good to check all these ETF and see which ETF has a better return. And you can compare between the return and between their yield, because you might just run and go to the high yield, but guess what? Your return is lower. And here we have other ETF that have a good year-to-date return, but they don't have 1 year return because they haven't been out for 1 year. As I've mentioned, this ETF, MLPI, it has returned 21 to 22% year to date, but it hasn't been out for a year because we know it came out mid-December last year. So we're going to see how much you're going to perform. How about the worst performing ETF from NEOS? NEHI, NEOS Ethereum High Income. Of course, it has to be down because Ethereum is down. But the yield is higher. So you want to invest in high yield, but your return is lower? I wouldn't want to do that. I would rather invest in an ETF like this, pays very low yield, but at least you're getting something. Your return overall is about 7%. The last thing I'm going to do here is to read this comment here from Matrates 1164. I like NVTI Target 25 a little better. It has performed well and has had some NAV growth. As I've mentioned, whenever there's a comment that I feel it's better for me to address a comment or question through a little bit of analysis, I would rather do that. So I'm going to show you this. Since the comment mentioned NVTI, I wanted to go deeper and give you a quick review about this ETF. YieldMax NVTI Performance and Distribution Target 25. So whenever you see the word Target 25, it usually means it does target 25% yield. So that's how you're going to get, as you can see here, distribution rate is going to be 25. So what this ETF does, it does write calls on NVIDIA, but it has a little bit lower leverage, and that's why the yield is a little bit less. So whenever there's an ETF that pays lower yield, like a 25, target 10, they tend to perform well as compared to other ETFs that they just have a higher yield, 60%, 80%, 100%, like a Tesla. As you can see, the performance of this ETF since it came out, this is a total return 10.82, so about 11%. But that's not a big return as compared to MVDY, the ETF that I talked about a couple of days ago. I made a video about that. The ETF has done really well. But again, there's a different risk here of these two ETFs. And this ETF, it hasn't been out for a long time. As you can see here, it was incepted on November 17, 2025. So it has been out for less than 6 months. The gross management expense ratio is 0.99, aligned with a lot of other YieldMax ETFs. And look at the distribution history. It does pay weekly distributions. In April, they paid around 22, 23, 24, 24. In May, they have paid 2 times, May 6th and May 13th, and that was 24 cents and 25 cents. So since this ETF is target 25, it's going to pay pretty consistent distributions. As you can see here, between 22 to 25 cents. That's what you're going to expect. And the yield again is 25% per annum. So if you get 25% per annum, and if your ETF doesn't have NAV erosion, that's a pretty good deal. Again, this is an ETF from YieldMax. It does have exposure to NVIDIA. So there are 2 single stock ETFs that have exposure to NVIDIA. There's NVTI and there's NVDY. NVDY pays higher distribution, is a little bit riskier, and the distribution usually varies. You can pay from 80% to 50% to like a 40%. But if you want a consistent and exposure to NVIDIA from YieldMax, then NVIT is going to be an ETF for you. So guys, I made this video to give you update on the NEOS ETFs and also the ETF from YieldMax that has performed well. And there was a comment about it. So if you find value in this video, as always, please give me a like. And if you haven't subscribed and you want to get more updates on all these income ETFs, make sure you subscribe to this channel, because here I give you a really data and performance of these ETFs, and good performance and bad performance. I really appreciate you watching this video today. Thank you very much for watching. I'll catch you next video. Bye bye.